Hello and welcome. We have seen a sharp decline in India's stock markets today, both the Nifty and the Sensex plunging nearly 1%. The Sensex also tumbling over 700 points at one point. Why is this happening? Why are we seeing a decline in the market mood? Many experts are telling NDTV that look, that's the tariff tussle, the tariff uncertainty. It's also a weak start to Q1 earnings at play. But is there more to these factors? Or is it just these key factors? Well, decode the market mood. I'm joined by G. Chokalingam. He is the founder of Economics Research and a senior market expert. Thank you for your time. First, why did the Indian stock market witness such sharp declines in trade today?
I would attribute this sharp decline to three set of factors. One is U.S. President, causing a lot of uncertainty regarding the trade deal between U.S. and India. So that is causing little concern for the markets. And
Mhm.
second, the Q1 expectation, it's not that robust. Market is expecting poor single-digit year-on-year growth in profit, particularly for Sensex and Nifty stocks. So that is also causing. Third, this is my personal strong view that there is also quite good amount of profit booking. It has been happening from the PE funds, promoters, all along. They've been exiting a lot of stocks. Now, in some cases, even the retail investors are booking profit because in March 2025, the overall market cap actually 385 lakh crore from the peak of 485 lakh crore in September 2024. So sorry, February 2025, we had a record low level of market cap in the current year, and it was down by about 100 lakh crore from the peak of 485 lakh crore in September 2024. But now, till 1 or 2 days ago, almost three-fourths of that erosion out of 100 lakh crore, in fact, we recovered 75 lakh crore a couple of days ago, from the low of February 2025. So in the process, a lot of small and mid cap stocks have gone up or recovered even 30, 40, 50%. So that has tempted even the retail investors, to book profits. Some of them are booking. So profits in the recent weeks. So
Mhm.
therefore, the profit booking by all set of clients like promoters, the PE funds, and now the retail investors, that also causing the weakness in the market.
Right. So these are the factors according to you. But for those wondering, investors wondering that look, in the midst of this tariff tussle, this tariff uncertainty that continues, a weak start to Q1 earnings at the moment, what should they be looking at? What sectors should they be looking at? How should they be approaching the markets in the next few days and weeks ahead?
At least for two more quarters, I don't think the Sensex and Nifty earning growth would be in double digit. We have to accept it. There is a single digit growth syndrome, what I call single digit growth syndrome, in several sectors which constitute Sensex and Nifty. Like you have a cement, FMCG, you have automobiles. There are many sectors, including paints. They are growing the revenues in volume term in single digit. Then you have a large IT companies which are growing the IT exports in dollar term in single digit. So this is not going to change dramatically in the next two quarters. So therefore, for one or two more quarters, you will see poor single digit growth. So the upside to Sensex and Nifty in the current calendar year or current fiscal year is limited. I would say that maximum it could be around 8% return in the current financial year. However, over 4,000 stocks are there in a small and mid cap space where I find a lot of opportunities. There are a lot of stocks which offer you unique growth stories. You have a deep value stories. You have acquisition possibilities. So you have the holding companies which are available at a steep discount. So there are many unique stories available among these over 4,000 small and mid cap stocks. So I continue to believe that this is the space one has to look at for making significant return in the current financial year. Still, if I am forced to give V1 sector, though again I would bank on public sector banks. Yes, the credit growth has come down to 9% from double digit, but then the PSU banks are far better position because of access to low cost deposits. Their CASA deposits remain very intact, and the net NPA is at more than a decade low level. which augurs well for this sector to do very well. And still, many stocks are trading at around one time or 1.3 time price to adjusted book value. So, this is one segment, which assures you a lot of comfort. So, that is what I would, believe in.
All right, that's as far as the near term to the medium term is concerned, this current financial year. But for those wondering, okay, what would you invest for the long term, for the next financial year, what would you say?
Uh, Next financial year, yes, you can look at, specifically within the automobile sector, some of the large cap stocks are beating the industry. I would like to avoid name unless you ask me. So that is why. So there are one or two, players who are, despite single digit volume growth in automobile sector, they are able to grow in strong double digit. And also the second space to look at is the pharmaceutical companies which are heavily focused on the domestic market, because it is going to take some more time for US to resolve the pending uncertainty regarding the export of pharmaceutical product to America. So
Mhm.
therefore, I would focus on the domestic formulation companies. You recently you saw a major deal involving acquisition of domestic company at a valuation of 6.5 times enterprise value to annual branded sales. So if that I take it as a benchmark, or even if I take 5.5 time is the benchmark enterprise value to branded domestic sales. In pharmaceutical sector, still there are many individual ideas available, which can give you very exciting return. So this is a second or third segment where I would have confidence. That is, apart from PSU banks, then select automobile player. One can also look at domestic branded formulation, but you should ensure that you are not paying more than 6.5 times enterprise value to branded sales. There are few trading at even 8, 10 times, but I believe that is not sustainable. So you have to be choosy in terms of the valuation comfort zone.
All right, so you have to be choosy, you have to select with caution, and you have to follow your expert advice. Thank you so much for decoding the market mood for our viewers, and we will continue to track the market momentum and more going forward. Thank you.